Tesla stock did not rise just because of Q2 delivery expectations. That is the simple explanation. But I think the deeper story is this. The market is starting to connect three things again: EV demand, FSD progress, and Robotaxi. And when those three narratives move at the same time, Tesla stock can react very differently from a normal car company. Good morning, this is Ken. Today, I want to explain why Tesla stock moved higher over the last 2 days. On the surface, the reason is easy to understand. Several analysts raised their expectations for Tesla's Q2 deliveries. That made the market think Tesla's EV business may not be as weak as feared. Maybe demand is stabilizing, maybe the bottom is already behind us. That was the first spark. But in my view, delivery expectations alone do not explain the full move. Deliveries are important, but they are short-term data. If the number is strong, the stock can rise. If the number is weak, the stock can fall. But Tesla's long-term valuation does not come only from how many cars it sells in one quarter. The real question is whether investors once again see Tesla as more than an EV maker. And that is exactly why this move matters. The market is not only reacting to Q2 deliveries, it is also reacting to signs that Tesla's software and AI story is becoming active again. At almost the same time, we saw three important developments. FSD V14 Lite is rolling out to Hardware 3 vehicles. Cybercab has been spotted in public road testing in Austin, and the NHTSA power steering investigation has been closed. Individually, each item is important. Together, they create a stronger story. Let's start with Q2 deliveries. The key point is that expectations may be improving. If Europe, China, and international markets are stronger than expected, investors may begin to believe that Tesla's EV sales have bottomed. That matters because Tesla stock has been under pressure from concerns about demand, pricing, and competition. So when analysts revise delivery estimates upward, the market naturally reacts. But as an investor, I do not want to stop there. A delivery beat can create a rally. But a true Tesla re-rating needs something bigger. That brings us to FSD V14 Lite for Hardware 3. This is important for both Tesla owners and Tesla investors. For a long time, Hardware 3 owners have had one major concern. Are older Tesla vehicles being left behind? Is FSD progress only for AI4 and newer cars? And is Hardware 3 already close to its limit? The rollout of FSD V14 Lite does not answer every question, but it sends an important signal. Tesla is still trying to increase the value of existing vehicles through software. This is one of the biggest differences between Tesla and traditional automakers. Most cars lose value after they are sold. Tesla vehicles can still improve after delivery. That does not mean every car becomes fully autonomous, and we still need to be realistic about Hardware 3. But from an investor's point of view, the message is clear. Tesla is not just selling hardware. Tesla is trying to turn its fleet into an upgradable software platform. Now, the bigger signal may be Cybercab. Cybercab entering public road testing in Austin is a very important development. Until now, Tesla's Robotaxi story has mostly been connected to Model Y-based testing and early operations. But Cybercab is different. It is designed from the beginning as a dedicated Robotaxi vehicle. No steering wheel, no pedals, no assumption that a human driver will take over. That changes the meaning of the vehicle. Of course, we should not overreact. This is not yet full commercial, driverless Robotaxi operation. There are still safety, regulatory, and scaling questions. But investors should pay attention to the stage change. Cybercab is no longer only a concept shown on a stage. It is moving into real-world road testing. For Tesla's long-term story, that is a meaningful step. The third point is the NHTSA investigation closure. This is not the main reason Tesla stock went up, but it supports the broader story. The investigation related to power steering issues in certain 2023 Model 3 and Model Y vehicles has now been closed after Tesla's response. The important point here is not just that one regulatory risk has been reduced, it also reminds investors of Tesla's OTA advantage. Tesla can sometimes address vehicle issues through software updates instead of only relying on physical repairs. That is part of why Tesla vehicles are different. They are cars, but they are also software-defined products. So, what is the market really pricing in? I think it is pricing in three things at once. First, Tesla's EV business may be stabilizing. Second, FSD momentum appears to be returning. Third, the dedicated robotaxi vehicle is moving closer to real-world validation. That combination is why this move feels different from a simple delivery rumor. The Tesla story is becoming connected again. EVs, software, AI, and robotaxi are moving in the same direction. But there are risks. The market may already be getting more optimistic. If Q2 deliveries come in below expectations, the stock could fall quickly. And even if deliveries are strong, margins still matter. More cars sold does not automatically mean stronger profits. Investors need to watch both volume and profitability. There are also risks around FSD and Robotaxi, FSD v14. Lite for Hardware 3 is important, but it does not prove that Hardware 3 can support full driverless operation. Cybercab testing is exciting, but testing is not the same as scaled commercial deployment. So, I see this rally as meaningful, but not fully confirmed yet. The market is starting to price in a better story. Now Tesla has to prove it with data, execution, and real-world progress. My view is simple. If this rally is only about Q2 deliveries, it may be short-term. But if the market is beginning to reprice Tesla as an AI and robotaxi company again, this move could be more important. The next key question is not only how many cars Tesla delivered. The bigger question is whether Tesla can connect the car business, the software business, and the robotaxi platform into one AI-driven ecosystem. That is the real investment story. So what do you think? Is this Tesla stock move just about Q2 delivery expectations? Or is this the beginning of a bigger AI and robotaxi revaluation? Let me know in the comments. If this video was helpful, please hit the like button and subscribe to Life in the Future. I cover Tesla, FSD, robotaxi, AI, and the future of mobility every day. Thanks for watching, and let's enjoy the future with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.